June 14th will prove to be a big, massive day for you if you're invested in gold, silver, or the precious metal mining stocks, because on that day, we'll hear from our friend Jerome Powell and the Federal Reserve regarding their most recent policy decision regarding interest rates. I think it could be a big shocker, and I'll offer a bold prediction at the end of this video. But before we do that, we need to dig in the weeds a little bit and talk about some interesting developments that I factored in when I did make the bold prediction. We don't have to like it, but what the Federal Reserve does and what the Federal Reserve says carries a lot of sway with the gold price and the silver price. When they're hawkish, when they're tightening monetary conditions, that sends the US dollar up and the value, the price of gold and silver down. So as we head into this all-important June 14th interest rate decision, we need to take a look at some fascinating factors that are developing right now that may play into what they decide. I like you, and I give you valuable silver and gold-oriented videos every single day for the rest of my life. I hope you decide to join me, subscribe, and please give this video a thumbs up. All the experts think the Fed needs to slow the economy down more, that they're going to raise rates on June 14th. That will be bad news for the silver price and the gold price. But I have 4 factors I want to take a look at. We'll start with, are we in a recession already right now? Does the Fed really need to slow the economy down? A lot of the data points that are coming through are pointing toward economic slowdown. We have the lag effect of what was a record level of interest rate hikes over the last 14 months. It takes a while for that to bleed through to the economy. I've got the worst analogy in the world for you, but I'll share it with you anyway. It's like when you put fertilizer on your yard. It doesn't instantly turn your grass green. It takes a little while. It's got to rain a few times, and then the grass starts to turn green. Well, the opposite with the Fed and the lag effects of the previous interest rate hikes over the last 14, 15 months. They're just now starting to bleed through to the economy, and we're seeing signs of stress everywhere. And what about this big debt limit deal they've supposedly come to? That's going to lower government spending. That's less money going into the economy. Now, again, that may not have an impact immediately, but as the market looks forward, as the Fed looks forward, they're going to see less and less government spending, which will be less and less money in the U.S. economy. Do you remember the banking crisis? It seems to have faded from everyone's consciousness, but it's still there. And a big effect of the banking stress that's going on right now is a contraction in credit. Banks aren't willing to loan as much money. They're all kind of running scared right now. When the banks aren't pumping money into the economy, well, yeah, you got it. That's less money in the economy, that slows things down. Another important factor for us to consider is the fact that once this debt limit situation is resolved, the Treasury, the U.S. government, they're out of money. They're going to need to borrow literally trillions of dollars. And where does that come from? Well, if the Fed's not going to buy the Treasuries, then that money has to come from the economy. Yet another force which is sucking money out of the economy. We've got the Treasury sucking money out. We got the banks not putting as much money out. We have people that have gone through all their savings and are now living on credit cards. The whole situation, to me, appears as though the Fed doesn't really need to do much more right now to slow the economy down. And they know that. And they know that in the coming 2 to 3 months, there's other factors involved as well. De-dollarization trend throughout the world. Foreigners, they're not wanting to buy as much treasuries, as many of our treasuries as in the past. Everything is coming together at once and constricting the U.S. economy. So while everybody's predicting the Fed's going to raise rates on June 14th, I'm going to go out on a limb. And based upon my analysis, my thoughts on the matter, I'll predict we have a pause. And I think that's going to send the price of gold and silver skyrocketing. I could see us $2,200 gold within the next 4 to 5 weeks, and silver could be pushing up to that 28 level, breaking through resistance. And who knows how high it could go from there. Hey, just my thoughts. I'm not offering financial advice, but when I look at the big picture of what we're seeing right now, it looks very positive for the price of silver and the price of gold. Watch a live stream here, and I'll see you next time. Hey everybody, it's Ron from Ron's Basement, live on the log flume with Lily. Lily, say hi.